try and narrow down or eyeball where you see it. What might help in the beginning is if you just draw some straight lines on the chart and then just see what you get. Don't be afraid to experiment. Don't be afraid to draw stuff on the chart and take a look at it. And you'll be able to see very quickly whether or not that area has any particular draw for the market. In fact, what I did here was I took a look at this high, these highs here, and then these lows here and here. So all I did was match up what was going on in this very small area. That's what I was focused on. Now what I'll do is look at what happens going to the right. And I'll look and see, did the markets stop in this area? Was there consolidation? And it's fine if the market pokes out like this. Again, I'm not trying to pinpoint this down to the tick. I'm trying to gain a leg up on my planning. So I see that the market did consolidate here. You've got consolidation area here. Just under the area, you had some consolidation. And then, of course, coming in through this region, you had a ton of action as the market tried to work its way through there. What I'm thinking is, at this point, this area is looking more and more like an accumulation than anything else. You can see that the bottoms are rising here, here, and here. The tops are rising as well, and the volatility looks like it's expanding to the upside. In general, I see that the market is just curving to the upside this way, rather than here where you can see the market was trying to curve, had a drastic move up and then spike down. I don't see that here. I just see a gradual move up. It looks like a very orderly accumulation where the marketplace just cannot make it to the downside. Highs are getting higher on the overall, lows are getting higher on the overall. So I think we're positioned well for a move back to the upside. You put that on top of this triangle pattern, which does look like it's breaking out to the upside. What that means from a standard technical analysis would be from top to bottom about a 625 pip move. Now there are different ways of measuring that. What I like to do is simply take this from the breakout point, which would be right here. That would put the pound north of $2, which would be up here about $2 and a penny. 2.0160 would be this high right here if the market does break out. So we'll have to see. Remember, as the market's moving up, it's got a lot of resistance to move through. It's got this area here at about 9,700, and it's also got these highs here, which you got to remember, the highs that we're looking at here have been in place since 1991. It's been quite a while since the market has broken above this level, so I think it's natural that you're seeing this consolidation. Now, one last thing, and I don't want to get too deep into the analysis. It's never a good thing to overanalyze. The last pattern that I want to keep myself aware of is what's called a diamond pattern. This was popularized back in the 30s. It's not talked about very much nowadays, but this can be a bearish pattern. Basically, you have two expanding triangles, one on the left, one on the right. And we're going to have to watch and see how this whole thing plays out. Generally, what you'll find is that when the market forms a triangle, it will also form what's called a waterfall pattern. It'll come out of this, it'll curve over, and then just all of a sudden drop off. So we've got to keep our eye on trading that's coming up, see if we can detect this waterfall pattern or any kind of change in the momentum after the market does wind up breaking out.